If you're looking for expert insights, real-world strategies, and actionable tips to level up your journey, you're in the right place. Every week, we bring you powerful content designed to help you make smarter moves, avoid costly mistakes, and achieve your goals faster. Whether you're a beginner or an experienced pro, there's always something new to learn here. So, if you're serious about success and ready to take action, hit that subscribe button and turn on notifications. Don't miss out, your future starts now. Get ready because we're about to make things happen. Let's jump right in and start building the life you've been working toward. 1. Understanding tax deductions as a real estate investor. Real estate investors have the advantage of deducting many business-related expenses, but understanding what qualifies is crucial. The IRS allows deductions on expenses that are ordinary and necessary for your business operations. Travel, meals, home office expenses, and professional fees can significantly reduce your taxable income. Keeping accurate records of every transaction is essential for a hassle-free tax season. Many investors miss out on deductions simply because they fail to track their expenses properly. Knowing the difference between personal and business expenses is key to maximizing your write-offs. If an expense directly supports your real estate business, it likely qualifies for a deduction. 2. How to deduct travel expenses for real estate business. If you travel for real estate purposes, many of your expenses can be deducted, provided they are for legitimate business reasons. Airfare, lodging, rental cars, and transportation costs while on business trips are deductible under IRS rules. The key to a valid deduction is proving that the trip was primarily for business purposes rather than personal leisure. Attending real estate conferences, scouting new investment properties, or meeting with contractors can all qualify as deductible business trips. Meals and incidentals incurred during travel may also be deducted, though typically at a 50% rate rather than in full. Detailed documentation, including receipts and an itinerary of business activities, is necessary to substantiate your claims. If you mix personal time with business, only the portion related to real estate activities is deductible. 3. Writing off meals as a real estate investor. Meals are another category where real estate investors can claim deductions, but strict rules apply to qualify. If you're dining with business partners, clients, or investors, the cost can typically be deducted at 50% of the total bill. The IRS requires that the meal must be directly related to your real estate business, meaning you must discuss business matters during the meal. Keeping detailed records, including the date, location, attendees, and business purpose, is essential for tax compliance. Meals during business travel can also be deducted at 50% as long as they are not considered extravagant. If you provide food for real estate seminars or networking events, you may be able to write off the full amount. The key is proper documentation to prove that the expense was necessary for conducting business. 4. Home office deduction for real estate investors. If you use part of your home exclusively for your real estate business, you may qualify for the home office deduction. This deduction allows you to write off a percentage of your rent, mortgage, utilities, and other household expenses. To qualify, the space must be used regularly and exclusively for business activities, such as managing properties or meeting clients. The IRS offers a simplified method, allowing you to deduct up to $1,500 based on square footage. Alternatively, you can calculate actual expenses, which may result in higher savings for investors with significant home office costs. The home office deduction can also apply to real estate agents, property managers, and landlords. Keeping a dedicated workspace rather than using shared areas like a kitchen table helps meet IRS requirements. 5. Vehicle and mileage deductions for real estate investors. If you use your vehicle for real estate-related activities, you can deduct mileage and other vehicle expenses. The IRS allows two methods: the standard mileage rate or the actual expense method. The standard mileage rate for 2024 is 67 cents per mile, making it a simple way to track business-related driving. The actual expense method lets you deduct gas, maintenance, insurance, and depreciation based on business use percentage. You can deduct mileage for property visits, tenant meetings, attending real estate events, and networking with other investors. Personal use mileage is not deductible, so keeping a detailed log is essential for IRS compliance. Using apps like MileIQ or Everlens can help track mileage automatically for tax purposes. If you lease your car for business, a percentage of your lease payments may be deductible. 6. Depreciation deductions on rental properties. Depreciation is one of the most powerful tax advantages for real estate investors, allowing you to write off the cost of rental properties over time. The IRS allows investors to depreciate residential properties over 27.5 years and commercial properties over 39 years. This deduction accounts for wear and tear, helping to offset rental income and lower your taxable income. Depreciation applies only to the building's value, not the land, so property valuations must be correctly allocated. You can also take advantage of bonus depreciation and Section 179 deductions for eligible property improvements. If you sell a property, depreciation recapture may apply, requiring you to pay taxes on previous deductions. However, 1031 exchanges allow you to defer capital gains and depreciation recapture taxes by reinvesting in another property. 7. Professional fees and education expenses. As a real estate investor, you can deduct professional fees such as lawyers, accountants, consultants, and property managers. Hiring professionals ensures compliance with legal and tax regulations, making these costs a necessary business expense. Tax preparation services, legal contract drafting, and financial advising are all deductible as long as they directly relate to your real estate business. Fees for attending real estate seminars, workshops, and online courses can also be written off as an educational expense. Books, subscriptions, and coaching programs that enhance your knowledge in real estate investing qualify for deductions. Memberships in real estate associations or investor groups can also be considered deductible professional expenses. Keeping invoices and receipts for all professional services is essential to substantiate claims during tax filings. Hiring a certified tax professional to structure your deductions properly can lead to even greater tax savings. 8. Repairs versus capital improvements. Understanding the difference. Not all property-related expenses are treated the same. Understanding the difference between repairs and capital improvements is key for maximizing deductions. Repairs such as fixing a leaky faucet, patching a hole in the wall, or replacing a broken appliance are deductible in the year they occur. These are considered ordinary and necessary maintenance costs that keep a rental property in good condition. Capital improvements, such as adding a new roof, remodeling a kitchen, or installing new flooring, must be depreciated over time rather than deducted immediately. The IRS considers improvements as investments that increase a property's value or extend its useful life. 9. Writing off advertising and marketing costs. Marketing is essential for real estate investors looking to attract tenants, buyers, or sellers, and the IRS allows deductions for these costs. Expenses for website development, online advertising, social media promotions, and direct mail campaigns can be fully deducted. If you run paid ads on platforms like Facebook, Google, or Zillow, these expenses qualify as deductible business costs. Creating professional real estate photography, videos, and virtual tours is also considered an eligible marketing expense. Business cards, flyers, and print advertisements designed to promote your properties or services can be written off as well. If you hire marketing consultants or agencies, their fees are fully deductible as professional expenses. 10. Legal entity structure and tax benefits. Choosing the right legal entity for your real estate investments can significantly impact your tax liability and asset protection. Many investors form LLCs, S-Corp, or C-Corp to manage their real estate business and gain tax advantages. LLCs provide liability protection while allowing pass-through taxation, meaning income is taxed only at the individual level. S-Corp help investors reduce self-employment taxes by paying themselves a reasonable salary and distributing profits as dividends. C-Corp may offer benefits for large-scale investors but require separate corporate taxation. Proper entity structuring can unlock deductions such as business expenses, retirement contributions, and health insurance premiums. That's it for today's video. I hope you got some valuable insights that you can start applying right away. If you found this information helpful, hit that like button. It really helps the channel grow and reach more people like you. And if you haven't already, make sure to subscribe and turn on notifications so you never miss out on powerful strategies to level up your journey. I'd love to hear your thoughts, so drop a comment below and let me know what you found most useful or what you'd like me to cover next. Also, if you're looking for more expert tips, check out the other videos on the channel. They're packed with actionable advice. Thanks for watching, and I'll see you in the next video. Keep learning, keep growing, and keep pushing toward success.